I'm going to hand you over here to David Hanlon from Revenue for a presentation on PAYE modernisation. Folks, if you want to flick forward just a few pages in your handouts, you'll get the slides that David is going to present. So I'll just ask David if he wants to come over here to the podium and we'll get underway.
That's great. Cheers, thanks. Grand. Yeah. Thanks very much. My name is David Hanlon and I'm here with Catherine Hines, and we both work in the change management unit of the PAYE modernisation project, and we're here today just to give you an overview of the PAYE project and to maybe give you an idea as to what business processes you might need to look at internally in order to change, in order to be ready on 1/1/19 when PAYE modernisation comes into effect. So why change the PAYE system as we have it? The reason being is that it's been around since 1960, and it's a very effective way of collecting tax, but it doesn't really reflect anymore the changing nature of employment or payroll. As you know, employments now, the job for life is not going to be the norm for this current generation that are coming through. People have multiple jobs. People have multiple jobs with the one employer. So it doesn't really reflect anymore the current nature of employments that people have. Payroll, as you know, has become a lot more complex and sophisticated, and then the opportunities that are provided to us by ICT that will allow us to talk seamlessly to each other. Don't you like? Your business processes can talk seamlessly with revenue and vice versa, so the uploading of RPNs and that kind of thing. And then the expectations that both employers and employees have in relation to their inquiries with revenue. Employers and employees expect when they contact revenue that we have the same information that you have. So if you ring up and you're talking about a payroll submission that you've put in, or an employee rings up and talks about a payslip that seems to be wrong, they expect that revenue can actually see that payslip. At the moment, that's not the case. We only have the detail in bulk at the end of the year, P35. We only have that one figure, and we can't assist really employees with inquiries to that level of detail. When PAYE modernisation comes in, we should be in a position to be able to be more effective in helping people with their inquiries. And the reason why we're introducing PAYE modernisation, we see that there's a benefit here to employers. And what we see is that it's going to be seamlessly integrated into the payroll system. So it'll just be an output of your payroll at the end of every time you run your payroll. Ultimately, it's going to minimise the cost for you to comply. And one of the ways that this is going to happen is because we're going to be abolishing all the P forms and a lot of the returns, so the P30s, the P45s, the P60, etc. They're all going to be a thing of the past with PAYE modernisation. Another important issue is that the right tax is going to be paid. So whatever you submit to us, the tax will be calculated on that based on your submission that you've given to us, but the current due dates won't change. So we'll be getting the right tax, but the current due dates won't change. And ultimately, again, there will be time savings for yourselves because, as we've said, the payroll submission that's going to come into us is just going to be an output of your own payroll processes if you use the software, the payroll software. For employees, there's going to be simplified online services through the PAYE services. They're going to be able to maximise the use of their entitlements. So if they've got a number of employments, they'll be able to see where they can best use their standard rate cut-off point and their tax credits. From 2020, there will be an automatic end-of-year review will be provided to employees from revenue. So that'll be from 2020 on. And employees will have access to real-time accurate data. So the payroll submission that you provide for each of your employees, for that particular employee, that will go into PAYE services, and they'll be able to go in and see their gross pay and the deductions that their employer has actually reported for them. So there'll be an element there where they're able to keep track and make sure that the right payments are going through for them. And then again, overall, there'll be a great deal of transparency for employees because they will have this oversight and they'll have the ability to go in and manage their own tax affairs. And obviously, we're not doing it unless there's something in it for revenue. And what we're changing in relation to the payroll system for revenue is that we are now going to have statutory in-year employer returns. It's going to make compliance easier for us because if we can see that there's an issue with a company or an employer where maybe the right returns aren't coming in or there's underpayments, we'll be able to intervene at a much earlier stage and hopefully help the company and help ourselves in order to make sure that the company is compliant. Again, we're going to have accurate, up-to-date income details, and this is going to help us with forecasting for budgets and that type of thing, that we're not waiting on the P35 to come in at the end of the year to be sure of the amount of money that's going to be coming into the Exchequer. Over time, we would envisage that there will be reduced customer contacts. But obviously, we do appreciate that when this system rolls out in the beginning, there will be increased customer contacts, both from yourselves and from employees. And we're building the systems in order to be able to deal with yourselves and deal with those inquiries when they come in. But over time, we would see that there will be reduced customer contacts because it's going to be coming in through the payroll submission, and because employees are going to be able to have access to their own data through PAYE services. And again, it will allow us to have timely, targeted interventions. If we see that there seems to be an issue with a particular employer, we will be able to intervene at a much earlier stage, rather than on this yearly basis that we have at the moment, where we have to wait for the P35 to come in and then have a look and see, is there an issue there? Now we'll be able to monitor on a month-by-month basis to see, is there an issue with a particular employer or a particular business. Just to put it into context, and I know that we all are fed up with the forms that come in and the amount of reporting that has to be done, but just so that you're aware of the quantum that we're dealing with. In 2016, there were 2.7 active employments in Ireland, and there were 206,000 employees who had more than one live employment. And some employees also had multiple employments with the same employer. There were 208,000 employers in 2016, and of those, 110,000 employers had 5 or less employees. So that's a huge number of employers with 5 or less employees. 98% of employers filed through Ross, and there's only a very limited number who actually have an e-file or an exemption. And in order to meet the employer PREM reporting obligations, 5.4 million forms were generated. You are all aware of what your current obligations are, but I'll just go over them again. Again, just to put it into context so that you can see what the current system is and what the changes are going to be and what the impact is going to be. So obviously, every time an employer pays an employee, they must apply the latest P2C, calculate the tax to be deducted, and provide the employee with a payslip that shows the pay and deductions. The employer must report on the P45 or P46 for every employee starting in employment with them or leaving an employment with them. Each month or quarter, they must submit a P30 and make the payment, and by February of the following year, complete a P35 with the associated listings for each of their employees. The new system, the high-level design for it and the process flow is going to look a little like this, and there won't be a huge change to what you're actually doing at the moment. So again, the employer identifies the employees to be paid, goes to revenue, gets the latest RPN, or this will come in automatically through the payroll software, performs the usual calculations using that RPN, finalises their payslip or their payroll. That then generates the normal file that goes to the bank so that the payments can be made, generates the payslips, and now it will generate a revenue report that will come directly to revenue. There will be nothing for you to do if you're using the payroll software. It will just be an output of it and it will come straight to revenue. Again, for the employee, they're not going to see any difference. Again, the money will go into their bank, or they'll get the money into their hand. They'll receive their payslip, but now they'll be able to go on to PAYE services and see their pay and deductions. Again, as we've said, the P30 is going to be abolished, and in its place, a statement is going to issue to employer each month with the total tax due based on the submissions that the employer has made to revenue. The statement will be deemed a return if no corrections are made by the return due date. So if you're happy with the submission that you've made, that there's no need for to make any changes, then after a certain period of time, it will just be deemed a return. And the employer payment will still be in line with the current due dates. We will be able to have debt management for underpayments in the year, and we will also be able to have in-year interventions based on risk analysis and reporting. The P45s and P46 again will become a thing of the past. The new employees you will set them up in the payroll. You'll poll for a revenue payroll notification, and then that will commence the employment with yourselves. The payroll submissions by employers will include a commencement or cessation date, so that will either start the employment or will cease the employment. So no more P45s, no more P46s, and the employee can manage their own employment record via the Jobs and Pension Services on PAYE services. The P60s will no longer be issued either. During the year, the employee can view up-to-date and pay and deductions on PAYE services. And at the end of the year, once a final report for the year is processed, the employee can see their final pay and deductions for the employment on PAYE services. So there'll be no need for you to issue P60s. Now, we are going to be talking to the banks and other institutions to make them aware that P60s are no longer going to be available to employees, and that this statement that that employees can go on PAYE services, that they can use that for whatever range of loans or with Susie or whoever it might be, that this is a valid document that they can use. And again, the end of year return is going to be abolished as well. There'll be no difference. Again, the December statement is going to come in. It'll be available in early January. The statement again will be deemed a return if no corrections are made by the return due date. And again, there'll be debt management for underpayments. In order to give PAYE modernisation its founding, obviously that we needed to introduce certain changes into the Finance Bill, and these were brought in Finance Bill 2017. And effectively, in order to give effect, the P2C will no longer be in existence. It will now be the revenue payroll notification. The provision is made for that the employer must honour before the making of a payment to an employee that they must report that to revenue. And a monthly statement will be issued by revenue to employers with the total income tax, USC and LPT deducted or repaid by the employer. The monthly return date continues to be the 14th, and for Ross filers it'll be the 23rd. And the standard rules will apply for those who have an e-filer exemption. Provisions are included to deal with specific situations where employers may not be able to comply with the legislation due to persistent technology, internet or electrical failures. So we're talking about like a storm Ophelia if the system goes down because of that. Importantly, the direct debit facility will continue to be available subject to revenue approval, but an important addition will be the variable direct debit will also be introduced, and this will help with the seamless payroll process that we're introducing, that you don't need to go in and make a top-up payment to your P30 returns that you're making, or that you're currently making, that you will be able to put in a variable direct debit and the payment will just come in based on that, like your utility bills. And provision is also there for revenue to raise an assessment for an income tax month. This assessment can be extended to 2 or more consecutive months. So whereas we used to look back at a particular period, so you'd look at the period for the P35 for 2015 or 2016, now we'll be able to look at January and February or March or whatever sequence of months that we want. And as Kieran said, there will be revised provisions for emergency tax. So always request the latest RPN, because that'll give you the detail and it'll mean that somebody won't have to go onto emergency tax if they're registered and if their employment is registered. So again, there'll be no if your employee has no PBSN, they'll go onto emergency tax straight at the 40%. And if they're not registered for PAYE but they have got a PBSN, it'll be at the lower rates. Again, another important change is the base of assessment under Schedule E is changing from an earnings basis to a receipts basis, with the exception of proprietary directors and DASP payments. Now, it's just a change really. The PAYE system has really always operated on a receipts basis, but just we're given legislative provision to changing it from being an earnings basis to a receipts basis. And another important item for you to note is that if PAYE is not withheld by employers on emoluments paid to employees, tax will be recouped by revenue on a grossed up basis. Now, specific exclusions continue to apply for vouchers that are given under Section 112B and payments made under PAYE settlement agreements, so they're your Section 985B settlements that you might make at the end of the year. As Kieran said, going to go through now a Ross demo just for you to have a look. They're not available in the pack, and these might change a little bit between now and go live date on 1/1/19, but this will just give you an idea as to how it looks and hopefully take a little bit of the fear factor out of it for you. Again, you'll just access the system through Ross as per normal. You can see down there in the bottom left hand corner that there's a tab for employee PAYE services. You click on that and you'll be brought into a screen with 6 options on it: revenue payroll notification, statement of account, payroll submission, and how you're going to make payments. So if you want to get an RPN, you can go in and you can request a new RPN, or you can look up an RPN, so that'll be instead of the P2C. Or you can go in and you can do it by detail by employer, or you can go in and look it up by PPSN. You will then get a notification saying that you've successfully downloaded the RPN and that the file is there. Now, of course, that file, if you're using payroll software, it'll be seamlessly integrated into your payroll system. Again, you go back to your options, and we're going to come now to the payroll submission. And this is what we envisage the payroll submission would look like for an employer who has less than five employees or less. So and they're not using payroll software. So obviously, we acknowledge that some employers don't use payroll software, so the facility will be there for employers to do this. So you go in, you register your employment will be there, you tell the submission type it's going to be, so it's your first or your original submission. You then enter your employee details. So again, you're putting in Mary Byrne, you're putting in her address, you're putting in her start date. But once you've done that, those details won't need to be changed again. They should be pre-populated the next time you go in, and then all you're really going in to change is the gross pay, the tax that you're inputting for those employees. But again, this is for employers who have 5 employees or less. And again, the detail is there. So this is the type of details that's going to be coming across in the payroll submission from your payroll software. But if you don't have that software, Revenue are providing this facility for you to go in. You can see there then you can add an employee. So if you need to add a new employee, you can go in and you can add an employee. Or if you're happy that all the details are correct, you can go in and you can submit it then to Revenue. You can then go back and you can review all your employee details just to make sure that what you're submitting to Revenue is correct. So I suppose what we could envisage is that somebody has gotten paid €1,000 in the month, but when you're typing it in onto this system here, if somebody puts in 10,000, that's what's going to be submitted to Revenue as being the payroll submission for that employer. And we would then that could generate queries back to yourselves as to, is this correct? Because if we haven't, all we're doing is taking the tax then that you're saying that you've paid. So when it comes to these screens here, it'd be very important that you're as accurate and precise as detail with the detail that you're putting in. So you get to submit it. You will then get a notification that the payroll has been submitted, and you'll get a notification of that. Again, we come back to the screens here. And this is going to be the statement of account that you're going to receive at the end of the month. So you'll be able to view the current statement of account for whichever month it is, and you'll be able to see the previous statements of accounts that are there. So you'll click on whichever month that you want. So let's say the current month, and you'll go in and it will give you a breakdown of the PAY, PRSI, USC, and LPT that we have calculated based on your submissions to us. You can then accept that. You can tick on the tab at the bottom there to accept it, or if you're happy that what you've submitted is correct, you don't need to do anything, and after a specific date it will be deemed a return, so there'll be no need for you to do anything. You'll be given the option, 2 options, as to either pay now or to pay later, depending on the date that you've actually made the submission, or if there's any corrections, and you can continue. You will get a notification then saying that your statement for the particular period has been accepted as a return. Again, we go back to the screens, and this will bring you now to the payment screen. So again, you'll have a range of options, and you'll be going into PAYE employer to make your payment. You'll go in, you can confirm the details again, so the year, the particular period, and then a breakdown of the tax that's due, so PAYE, PRSI, etc. Then you can make the payment, and you'll go in and you'll pick your whichever option it is, either through a Ross direct debit or credit card or debit card, or using your bank details. You enter in your bank details, you go to your inbox, the payment has been submitted, you get a receipt and reference number telling you what the payment reference number is, and then you're satisfied that you've made that payment. And so roughly that's how the Ross demo, that's how the system is going to look, and it's mostly for employers with 5 or less employees, the bulk of that. But just to give an idea, it's fairly intuitive, it's easy to navigate, and that's the way we're building it, so is that it will be easy for employers to use. We've had extensive external stakeholder engagement, and from this it has become clear from the consultation to date that for some employers the focus on the end of year reporting may have contributed to in-year payroll processing practices that are not fully in line with PAYE obligations. The real-time reporting regime will make these visible, and such processes will need to change. We've heard stories where an employer goes to their accountant with a shoebox and says to them, full of receipts, can you do me up a P35 at the end of the year to go into them in December? The accountant does up to P35 and submits it. That will no longer you'll no longer be able to do that, because revenue will expect to see payroll submissions coming in every time you make a payment to an employee. So I'm not saying that anybody here is doing that, obviously, but that is stories that we've heard. So it's just that for those companies, those business processes will have to be changed. But your own business processes, if there's anything in there that aren't in line with the PAYE obligations, then you need to have a look at them to make sure that you're going to meet those PAYE obligations. We do recognise that errors in payroll will occur, but every effort should be made to ensure that the submissions to revenue are accurate and timely. Employees must be easily able to reconcile their payslips with the data submitted to revenue on their behalf. So when the employee has their payslip in front of them, when they go into PAYE services, they should be able to match the two. Because if there's a difference between the two, the employee is going to be coming back to you and say, why is my gross pay different on the PAYE services? Or why is the tax or the PRSI that I've paid different on PAYE services to what's on my payslip? All data received, including corrections and the timing of submissions, will feed into Revenue's risk analysis systems. In relation to DASP income, and I know that Elena is going to talk about that in a few minutes, but Revenue will receive real-time interfaces of taxable DASP income. This income will reduce tax credits and rate bands, and an updated RPN will be made available. Where the DASP payments have been mandated to the employer, you should remove the payment from income tax for income tax, PRSI and USC, and calculate deduction based on the RPN. Where the DASP payment has not been mandated to the employer, you should use the RPN to calculate the deductions. It is important that payroll polls for an updated RPN since the last payroll was run each time the payroll is run, to ensure that the correct deductions are made from all employees. On the employer readiness side, Revenue is now contacting employers who appear, based on analysis of the 2016 P35 returns, not to have informed Revenue of new employees. Letters have been issuing since late September and will continue to issue in November in batches. These letters will be available to view in your inbox and under the category PAYE Employer P35L Review, but you've also physically received these letters. What we noticed from the review was that there was approximately 30,000 employers who either had one or all of their employees were only notified to Revenue when the P35 was submitted. So we don't know what P2C they were operating off, what issues that might give. So that's why we're contacting those employers to get them to regularise the position as quickly as possible. So if you did receive those letters, act on the letter and follow the instructions that's in there. Revenue will be requesting all employers to submit an employee list at some point in 2018. This will contain a list of the employees currently working for the employer. The objective of this exercise is to get RPNs for 2019 correct from the start of the year. So we want to make sure that when PAY modernisation commences in 1/1/19, that we have the most accurate and up-to-date information, so that the RPNs that you're working off are accurate, are based on the details for those employees. The employee list that you send in will then be followed up with a revenue matching exercise based on name, based on PPSN and based on address, that type of thing. We acknowledge that there is a challenge out there for Revenue, and a challenge for Revenue will be to engage those employers who are not covered by the main representative bodies or umbrella organisations. So you're lucky with IPASS. IPASS have been great in that they've been informing all their clients in relation to PAY modernisation, but we are aware that there are other employers out there who aren't part of any organisation, and we know that we need to get the message out to them as well. Revenue will seek to spread its communications net as wide as possible to make sure all employers are aware of their changing obligations. And this will need to be done early enough to ensure that they make the appropriate arrangements to meet the timelines for this project. So if you need to make changes to your business processes, you need to start looking at them now so that those changes can be made in time for 1/1/19. We fully recognise that the project isn't just a software challenge. For Revenue and employers alike, there is a significant business process change and a change management exercise that will need to be completed before 2019. Readiness on both sides will be challenging in the timescales, and will be monitored closely throughout the project. The external stakeholder steering meetings will be used to report on revenue's readiness and assess employer readiness. We have meetings with external stakeholders on a monthly basis, and they give us great feedback as to what issues are coming up, and we can inform them as to the progress in relation to the project and PAY modernisation. Just to give you an idea, for the quarter, last quarter 2017, this is the engagement that we've had so far. So you can see there we're engaged with big employers like CIE and Dublin Bus Éireann. We're reaching out to the Big Four. We go to as many events as we possibly can. We've taken part in SAP technical meetings. We've met with BDO, and of course we're doing 25 sessions with IPASS during November and December. And these are a great opportunity for us to get the message out there and spread the message as wide as possible. So in order to prepare for PAY modernisation, what you need to do is make sure that you have the right PPSN for all of your employees. Have you registered your employees with Revenue? Have you an up-to-date tax credit certificate for all your employees? Have you completed the P45 process for any employees who have stopped working for you? And have you adequate controls in place to ensure that benefits and notional pay are being accurately calculated during the year? So if you need to put in a process to make sure that company car BIK is accurate, that it doesn't all come in December, that's when you're looking at it, that you're looking at it on a periodic review throughout the year to make sure that there's no surprises either for yourselves or for employees at the end of the year. And are you aware of your duties as an employer at the end of the year? So we're coming to the end now, and the next steps are that you can look onto Revenue .ie for regular updates. There's a tab there under employing people, and if you go onto that, then you will see PAY modernisation. Again, we're holding monthly external stakeholder update meetings, so the outcome of those are available on the website as well. And if you have any questions or feedback, you can send them through to that email address there, and we will try and get a response back out to you. So if there's anything specific that you have, or just even general query, you can use that facility there in order to communicate with Revenue. So thanks very much for your time. Appreciate that.
So folks, what we'll do now for a second is get Elaine from the Department of Employment Affairs and Social Protection. She's going to deliver just a presentation on illness benefit, and once we're finished up with Elaine's presentation, what we'll then do is open it up to any questions and answers either on PAY modernisation or an illness benefit. We'll open it up at that point.
Sorry, I'm late.
That's okay. You can see it up or down, or you can use it.
Perfect, great. Okay, hi everybody. My name is Elaine Donlan. I'm just here today to talk to you just briefly about illness or injury benefit. Sorry I was late. I was drafted in at the 11th hour and he was supposed to be here. So just first off, what do we do? Okay, so Illness Benefit Branch receives approximately 1,000 claims for illness benefit and occupational injury benefit per day. All claims require medical certification to ensure continued medical eligibility and are subject to tax, apart from payment in respect of child dependents as they're currently exempt. Okay, from January 2018, claimants will be advised on the illness or injury benefit award notification letter that their payment is taxable and that they should inform their employer of that amount where appropriate. So taxation of illness and injury benefit. Employers currently receive a notification through the Revenue Online service from the DEASP to advise that their employee has a claim for illness benefit. We provide this information in order to enable the employer to apply the correct amount of tax to the employee's wage. However, from January 2018, the income tax due on an illness benefit is going to be collected by Revenue, who's going to adjust the employee's tax credits. Okay, so therefore, under data protection, we cannot continue to issue the employer notification as there is no legislative or legitimate business reason to do so. Okay, so basically, we currently supply the details to the employers through the Ross box, okay? But because as Revenue are changing how they're going to be taxing individuals, and they're going to be taking the tax credits directly from the individual personal credits, which will be based on information that we will give directly to Revenue, we can no longer continue to give this information to employers, okay? So from January, our illness benefit or injury benefit award notification letter is going to include a sentence that says, illness benefit is taxable. If your employer is paying you during your sick leave, you should inform them of the total weekly amount of your claim, less any allowances for child dependents, as this is not subject to tax. For tax-related queries, please contact your local tax office. From quarter 2, the award notification will include a rate breakdown box advising them of the taxable total that they are receiving, and they are informed that they should advise their employer of this. It's important to remember that the DEASP's legal contract for claim purposes is with our customer, who's the IB client. It's not with their employer. Okay, so as we are given this information directly to our customer, we can no longer continue to issue it to a third party. So for people that nominate their payments to their employers, so if there's a sick pay scheme in place and the claimant nominates their employer to receive the illness benefit payment, this will issue to the employer's account, and the details for each payment will be available in the data string. Okay, so the data string contains the PPSN number and the payment information. Now, I know this is in your handbook, but it's just in colour, it's easier to see where it's broken down. Okay, so even though the information is broken down, you do have all of the things that you require there. So you can see the PPS number, the scheme code, which is what scheme that they're in receipt of. Illness benefit is always 01. The designated date is the date that the payment issues, and the payment from and to date is the period which the payment refers to. Okay. Now, we are doing this at the moment. This is currently under review on dash protection grounds. Okay, so I'm sure you've all heard the GDPR, the General Dash Protection Regulations, coming into force next year. But we are doing this at the moment, and until we're told we can't, we'll continue to do it. Okay. So moving to a new system, illness benefit is moving to a new system in quarter 2 2018, okay? So the application process will change. The claim form and medical certificates will be separate documents, and this is to ensure safeguards are in place for dash protection. It also supports the introduction of online services and the future possibilities of GPs being in a position to certify online, okay? So employers and HR sections will probably see a change on foot of some of our processes, okay? So the physical application form will change, as it will our medical certificate. The first medical certificate will no longer be included on the application form, and they've been separated for dash protection reasons. Now there is an example of one each in the appendixes in your pack as well. So they've been separated out, the application form and the medical certificate. If an employer requests to see the application form from their employee, they're actually going to be in breach of dash protection, as these forms contain information that directly relates to the IB claim, and the employers do not have any legal right to see this information. So if I'm applying for illness benefit, I can apply for my spouse or partner. So it has details of who they are, what they earn, property we may own, stocks or shares we may have, children that we may be supporting, and the employer doesn't have any legal right to see that information. So it's been separated out for that reason. Okay. The other thing is going to be changing for ourselves is we're introducing closed certification, and this has been implemented, allowing GPs to certify for longer periods. Okay, so currently, the department determines how frequently you require medical certification in relation to illness benefits. So you go on weekly certs until we decide to put you on monthlies. Okay, so this is going to be putting the how regular you go back to see your GP back into the medical professional's hands. So how often he sees you, he or she sees you, is how often they deem it. Okay, so it doesn't have to be in 1 week or 1 month blocks. They can certify a patient for periods anything up to and including 26 weeks. So if employers start to see certs for 8 days, 10 days, 2 weeks, 4 weeks, 10 weeks, that's the reason why. Now, I know it did come up in a seminar previously, what if the employer wants to see it weekly or monthly, and that's between the employee and the employer. Okay, so but for ourselves, in order to continue to be eligible for illness benefit, we'll only require medical certification as frequently as the GP tells us to require it. Okay. These changes have been put in place for a number of reasons. First and foremost, safeguarding our customers' data. Then also, like I said, ensuring the medical professionals drive the patterns and the periods. And then also allowing for the introduction of scanning within the illness benefit branch. Okay, so we're going to be changing our internal processes at quarter 2 as well. It also does support future possible online services. We're hoping that in the not too distant future that GPs should be in a position to certify online. So which means they could route the medical certificate to us directly rather than handing it to the employee or to the patient, and for the patient then to have to post it to us in Dublin if they're down in Cork or wherever. And we're hoping that if and when this does go live, that it will be in a position to produce a receipt style document to give to the patient, that they can give it to the employer as evidence if required. That's everything that I have to tell you in a nutshell, and I think between myself and David we can try and answer questions you may have. All right, thank you very much.